Welcome back for another weekend deep dive. My name is Justin, and this weekend we're going to try to figure out whether or not the S&P is going to continue to new all-time highs above 454 on SPY, and notably, is tech going to lead us to that all-time high? The reason why it's important this week is because we have like $10 trillion of market cap that's reporting, pretty much all of the big trillion-dollar companies that matter. And we're due for a bounce, the end of month, and the seasonality chart tells us that it should be straight up from here. So in this video, we're going to try to figure out whether or not Facebook, Microsoft, Alphabet, Apple, Amazon, and all the other big companies reporting this week are going to drive us to that new record high. As we can note here on the seasonality chart, which just tells us the average move of the last 20 years, we have a clear W that forms into this pattern here, into the end of the month. So if we're going to respect this pattern, we should do a W with a massive win. We did this last year. We do it most years. If we have a look here specifically at the end of the month, what we should be looking for is a big advance into the end of the month here. So this should be starting into the end of October and then continuing through to November. There's also going to be an FOMC meeting on November 2nd, which is going to be very important for us just after this week. So again, 150 plus companies report and roughly $10 trillion. So if we don't advance by the end of this month, we have to kickstart it right into the first week of November on the Fed. So what would that mean? Well, we just continue to remain valid on the seasonality chart. So that's pretty much what we're looking for. We're looking for an advancement and looking for that confirmation from the Fed on the first week of November. So in this weekend's video, we're going to go through our normal schedule, and we're going to go through and have a look at the S&P summary, the heat map, option clues, market moving news, economic calendar, ETF reviews, and charting. What I want to focus on first here is actually going to be how we were able to figure out we were going to be moving higher, because being bullish during this period here of extreme chop was not easy. So let's just take this a step back here and see how long has Justin been bullish for, and what were the clues. So if we just quickly look here again, this is on Trello. It's built by Atlassian. We can just see that pretty much since the end of August to where we are now, I've been bullish. I've been straight bullish. I had a couple months here where I was a little bit neutral, maybe once bearish, not eager to trade in the later part of the summer. Well, here we are, ready for that advance. And it's not been easy. It was not easy to be bullish during the month of September or October, but here we are. I think we're ready for new all-time highs. So again, this weekend, there's a few things we're going to focus on, and notably, Goldman Sachs, right? They've reiterated their end-of-year targets a couple of weeks ago for 470 from David Kostin, their chief strategist. And seasonality chart tells us that we should be getting a push into the end of the month and then advancing into November fast. What's the shakeout or the net effect going to be from $10 trillion in market cap reporting and 150 companies? And then on the 2nd of November, we got the FOMC. So I'm going to try to jam-pack all the content in pretty fast in this video. I'm going to be focusing on the $1 trillion club as well. And what I would really appreciate, as you're smushing that thumbs up, is to drop me a comment. Which company would you bet on this week? Would you bet on Facebook, Google, Microsoft, Apple, or Amazon? These two companies specifically provide a very good clue to where we're going to be going. It's also important to note that they report at the end of the week, which would also align with that. Again, right here, we know that we also got, I forgot about that. We got GDP on Thursday. So we got GDP on Thursday pre-market, and then we got the big boys reporting after hours on Thursday, including Apple and Amazon. So that could be part of what's going to start the rally up here, and then we just got to squeeze into November 2nd. All right. I also have something I'm going to go through here again, specifically talking about how we can see what the individual voting members are saying, and then specifically looking at Jerome Powell's comments that came out on Friday for a preview for November 2nd. There we go. All right, let's jump in here. So I'm gonna try to go through a little bit faster this week to try to wrap it up in about 25 to 30 minutes. So again, this has been our template so far. It's not the Bible, but it's been a very good guide, and it served us well. I need a coffee. All right, so if we're going to respect the seasonality chart, again, into, I don't know, like the first Friday of November, we better be at like 460. Otherwise, the advance into the end of the year looks a little bit less certain. Looking here, again, that we're looking for a W, which has completed for the most part. We're looking for a specific advance into the end of October and the first week of November. And again, FOMC meeting kicks off on November 2nd. W is already complete. All we got to do now is make sure we just protect. That's all we got to do. We just got to protect and we should advance. Looking here at the monthly chart, key areas are now being identified. We can see here that we got a dotted line at 423%. That is a Fibonacci extension off of this retracement right here. And that gives us 466. We also got 452.5 is a very important pivot going into the end of the month. Meaning, if we can close about 452.5 by the end of the month, that's really bullish. Why? It means that we're likely going to be advancing. It'd be a bull pivot. So if we can close above it, maybe at 455, maybe a little bit higher, we could back test to form a little bit of a wick and test that 450 area. Maybe even as far down as 447. And then advance, right? So we want to see a push. Why? Again, if we're going to be getting a massive move like this, there should maybe only be a little bit of a tick lower and then a straight up move. So 452.5 remains a very important barrier. Looking here at the weekly chart, we can note that we got a record close by 4 cents, right? 4 cents, but still a record. And we have a cup and handle forming here, and 444 is going to be a weekly higher low. That 444 area can also be found here on the daily chart from the 50-day moving average. So those levels are identified here with pink. 447.2 is key support now. It used to be resistance. That comes from our previous head and shoulders pattern and that previous top we put in all the way back here. So 447.2 holds. That would actually, if we test that area, it would fill the gap. There's quite a few gaps here, right? We got gaps in a few different spots. We did the same thing roughly in November 2nd of last year when we had what? The election. All right, the election kicked us higher. So November 2, this year we got November 2 for the Fed. Is that going to be it? Is that going to cinch it for the bulls? I think so. 455 is going to be a 423% extension from the October to November 2020 dip. Again, just go back in the chart if you want to see that. We have the same W extension like we did right here, right? Nike swoosh with a big W. All right, looking here at the hourly chart, we can note that we got the same areas identified from the daily chart. We got 2 pink lines, and also important here, 448.5 was another very important area from before and is now the 50 hourly moving average. We got 444 as the 61% extension, again, that dotted line. And then we got 440 as the 200 hourly moving average. So really important here, right? Those are all the areas. So if we're going to hold in advance, we know where the support should be found. All right, next thing we're going to look at here is going to be, let's look at the calendar of events. Then I'm going to jump over to big tech in about 2 minutes here. So again, just getting through this really fast. This really matters. So whatever happens in the first half of the week, we have to make sure that by Thursday close and Friday open, we are higher. We've got big events this week. We got the BOC with a press conference. We got the BOJ with a conference. We got the ECB monetary marginal lending facility interest rate decision. We got GDP on Thursday pre-market. We're looking for 2.8, and we'll see whether or not that comes in with a beat. If it does, it's probably going to be really good for us. If it doesn't mean we're down and out. It means the Fed might be able to remain accommodative for a little bit longer going into their November 2nd meeting. Finally, we got an ECB press conference. We got CPI out of Europe year over year. And then we got GDP, German GDP on Friday for Q3. That's going to really matter. Looking here to the calendar of key dates and events. There's a lot of data coming through here. Again, we're going to be focusing on the stuff that really matters. GDP, CPI, and then earnings. Looking here, oof, right? In the next 2 weeks, we got 300 plus companies reporting. There's some big companies in here too. Notably on the 28th, that's the really big day. Apple, Amazon, right? That's the big day. Every day we got a big company reporting. It's also important to note that we got advertiser companies reporting first on Monday and Tuesday. We got Facebook and Google. Microsoft is a software provider. That's interesting. And then we got AMD, I believe. Where's AMD? I don't even see AMD on here. I know they report somewhere. Let's see where they are actually. AMD reports Tuesday after hours with Microsoft, Apple, and Visa. That's going to be a big day. Moving forward, again, into next week, big dates as well. So we're going to have the FOMC on Wednesday, on the 2nd here, and then also having a lot of other key big earnings. And then we got this, right? November 2 and 3. So actually, my apologies. On the 3rd is when we're going to have the FOMC meeting. We're going to have the press conference, interest rate decision, and everything else. It's also important to note here that we're expecting an announcement of tapering in November for it to begin in December. I've talked about this before, but Looking at the asterisk here, it tells us that December is a meeting associated with summary of economic projections. What would that mean? They tell us that we're anticipating to raise rates in November, and by December, if the parameters are met, then we taper. Sorry, not raise rates. We're going to taper starting in December based on economic projections if everything goes according to plan between November and December. What I want to look at now, just briefly to touch on these points, is going to be again, who votes and who doesn't vote. Well, gone. Who else is gone here? Rosengren, gone. Kaplan, gone, which means they got 2 chances to replace these Fed voting members for 2022. And again, the camp is pretty close into, we're not there yet. So these 2 guys are gone. Their voices are no longer going to be heard. And we have to assume that Mr. Jerome Powell is going to do what he's always said. Let's look through some of the comments that he said on Friday. And again, thinking about that, what could happen going into the November and December meetings. Supply chain bottlenecks are still weighing. Oh, what does that mean? Probably more accommodation, right? Fed's Powell cannot rule out another spike this winter. What does that mean? He might want to wait to see what happens during flu season, notably between November and December. And if everything goes according to plan, then we taper. Wouldn't that make sense? Would for me. So again, announce in November that we plan to raise when? In December, if everything goes according to plan. If nothing goes really bad, we're going to be tapering in November. I'm sorry for misspeaking, just it's been a long morning already. Cannot rule out another spike. What does that mean? Well, it's already been 2 years of accommodation. Why not wait another 1 month to make sure for sure that when we do remove some accommodation, that it's going to be favorably accepted? Our view is high inflation is likely to abate. What does he mean? Hey, we can afford to actually print for a little bit longer. We can afford to wait 1 more month. Fed's tools do not much for supply constraints. What does that mean? If supply chain constraints remain, the Fed should not remain accommodative purely for that reason. Supply side constraints have gotten worse in some cases recently. Yep. High inflation will likely last well into next year. Cool. Fed on track to complete tapering by mid-2022. Nothing new. It just tells us that complete tapering by mid-2022, and then Fed would raise rates if it sees serious risks of higher inflation expectations. So again, that would be after. We are not on track to begin our taper. Oh, sorry, we are on track to begin our taper. So announce the taper, begin the taper, and then raise rates in late 2022. Inflation is well above our target, but again, overshooting has not been something that is forces the hand of the Fed. So again, this is not a situation that our patient approach, a framework, was designed for. It doesn't mean that this is going to be the thing that's going to make them raise rates. Inflation is well above target. Cool. It would be premature to raise rates. What is he saying? Our current patient stance is not what we're designed for. Inflation is well above target, but it would be premature to raise rates. What's all they're going to talk about? Tapering. That's it. Just tapering. Fed's inflation employment goals are somewhat in tension. There you go. We do not know how long it will take for inflation to abate. So again, they think it's going to abate, but they don't know how long it's going to take to abate. What does that basically mean? Transitory. Risks are now clearly that now to longer and more persistent to high inflation. But again, one more time, it would be premature to raise rates. That's what the market really cares about. Tapering doesn't really matter, in my opinion. I do think it's time to taper, not time to raise rates, right? There you go. Super, super simple. Hopeful there can be votes on the 2 bills next week. Thank you, Pelosi, right? More stimulus, that'll definitely make us go higher. And there's just one more comment here from Powell I think I want to go through. Actually, I think that's it. All right, let's advance. And again, who's in the camp of we're not there yet, but we're probably getting closer? Well, Jerome's basically saying we should announce it now. Announce now. Now. Announce it now. Begin in the winter. There we go. It's been about 14 minutes. That's not so bad. All right, let's move forward to big tech now. So what I want to actually do now is going to be to move forward to big tech. By the way, there are some extra notes here. Again, we have member-only analysis and algo reminders. That is very important for my analysis week. Also here, have a revised buy pocket for October 2021. Want to see where those levels come from? Just pop over to the SPX channel and you will see them. ETFs and indicators. So what I actually want to go through really fast, and then we'll go to the $1 trillion club earnings report, is going to be just the ETFs that are shaking out here. So if we're really going to get an advancement into the end of the year, I just want to see what the consensus is here. So if it holds, this is from the Whisper Report, whisperreport.com. Very good service if you want to go sign up for it. Here, all I really want to focus on is going to be the areas that are underlined. So again, read the rest. You can pause the video, read the text if you want. They're basically saying that we continue to view 4365 as an important point for the market and will trade long ahead of earnings while the S&P holds above this level. This is a very big service, Earnings Whisper. And 436 is that monthly area that we've all been watching. So if 440 holds, which I expect, and we hold a higher weekly low, we should be able to advance. 436 is kind of the line in the sand to say that we're still bullish. Second screenshot here tells us two key things, and looking in hindsight, this makes perfect sense. The last week of each month has generally seen the Fed let assets roll off its balance sheet, making it essentially a net seller of bonds at the end of the month. That's the pressure we could be seeing into the end of the month. So the net effect between all the earnings, the Fed potentially selling some bonds, we got to see what's going to happen. But the real story is that during the middle of each month, just before volatility peaked, the Fed has bought approximately 75% of its bonds in this 1 week. So what happened this last week? A mega boom to equities, right? Big advance. Looking at QQQ here, again, this is the one that really matters. It's the only ETF that's really not at all-time highs right now. NYSE, well, the other ones we look at in a moment are all at all-time highs. So QQQ, it needs to advance. And as we look forward to the trillion-dollar company, we're going to get previews for that. Snapchat really shook the tree on Friday. Big time. Moving forward here, we got XLF, the 161% extension from the June dip here is now pretty much met. So again, normally we see XLF and QQQ rotate. So I would really like to see XLF cool off and QQQ start to advance, to pick up the slack and start to actually lead. Without a tech-led rally, I have a hard time believing this rally is going to hold all the way through to 2022. XLV, nice solid week, big power up, right? All the way back to resistance here, powered up off 125, back up here at 131.6, the exact area I was watching. So if we can advance here, that should be a bull pivot, watching really close. RSP, or equal weight S&P 500, already at a record, an intra-week high and record close. I'm notably watching that one, right? Market's already ready to go up. It just needs tech to agree. So as we go through those big tech earnings, it's going to really matter. And again, if you guys wouldn't mind smushing that thumbs up, and if you haven't already, let me know. Which company do you believe is going to report earnings that are going to crush this week? Is it going to be Facebook, Microsoft, Alphabet, Apple, Amazon, or maybe you're like, you know what, it's going to be AMD. It's going to be that AMD. All right, here we go. NYSE, new all-time high and close. DIA, new all-time high and close. IWM, is it finally going to do something? All right, it's been doing nothing for a really long time. I think we're going to need to see tech pick up, ARK follow, and then IWM is likely going to move to new all-time high as well. It's really interesting, too, that we saw the Digital World Acquisition Corp, or DWAC stock list this week, sucking out a lot of liquidity from AMC and GME. IWM pretty much doesn't care, though, up 1% on the week. XLE continues to advance, and that's really important for us. ARKK, or Kathy Wood's flagship fund. I see an inverse head and shoulders here with the neckline right here at 106. 121 is a very important pivot and a very important relative low. What would that mean? Well, if we can actually move over the 50 moving average, which is at roughly 122, that would be a bull break in my opinion. Tesla's already picking up. We just have to see a shakeout for the rest of her names to actually advance. EEM, or emerging markets, I'm noticing a W forming here. So all we got to do is actually break through the downtrend, the 50 moving average, and then we can probably push back up here to about 55, 56. That would also align with an end of year rally for the whole world. And again, we're looking for GDP and numbers from most of the, central bank policy from most of the major banks this week. What does that mean? It's going to really matter. It's going to really matter. The whole world has a lot of data this week, lots of important information. FXI, similar notes. We're rocking a solid downtrend here. If we can break through that, we got the 200 weekly and the 50 weekly to confirm the move. And again, a W is forming here, forming, not formed. So looking at DXY next, have we hit peak DXY? Just purely looking at the moving averages here, we got a death cross. And then again, rejecting off the 200 weekly moving average. Let's look and see if we actually make a move lower, back below 93.2 specifically. And now we're going to jump over here to the trillion companies reporting this week. So let's go through here now. This is maybe a little bit complicated for the average viewer. So just bear in mind as we go through here. I will try to go through this fast and I'll provide my high level notes. I'm not going to jump in too deep. Facebook here, we're on support. I say we're on support because we're right around the 50 weekly moving average. That is a short-term price. We've had a soft landing all the way down to here. Again, we're looking at a weekly chart to smooth the data out. Google definitely extended, right, way off the 50 here. It's at about 2250. That's like 10% lower. So if Google is going to start sliding, it might really hurt us. And again, just looking at the timing of when these companies report, I put them in order. So Facebook on Monday, Alphabet on Tuesday with Microsoft, and then we got Apple and Amazon on Thursday with that GDP in the morning. So I put them through in the order that we're likely going to see the feedback to the market. Microsoft, again, extended, but with a bull break. We got full year 2022 guidance raise expected on 0365 price hike. What does that mean? They're going to be raising the price of Office 365 for the very first time, and that's going to lead through to 2022 guidance, I think. Apple, is the king ready to lead? It's not at all-time highs. Apple's the biggest stock in the entire market. It needs to actually advance for us to actually be able to sustain the rally higher. Pre-sales for the Mac and AirPod Pro Generation 3 that we saw this week, I think last week, those should allow them to guide for this next quarter. Why? Again, they said buy this week, ship next week. So they should be seeing some early clues compared to what they historically see. And again, Apple usually delivers half of their annual earnings and their revenue in Q4. Back to school, holiday boom, that's what we're looking for, right? Santa Claus rally, ho, ho, ho. Amazon has to step up. It has to step up. It's been doing nothing for a very long time, just like Netflix and a lot of other tech stocks. So we have to bust. We got to bust to new all-time highs, just like Apple. Now what I actually want to look at is going to be the heat map. Then we'll come back and look at what all these complicated numbers here tell us. Again, I got some graphs. I got some lines. We'll see what all this means. It just pretty much means that I think the second half of the week is when we're going to really see that pickup here. Let's look at the heat map for year to date. I'm looking at these ones, right? Barely green. Amazon's barely green. Not far behind is Apple at 12%. So we noted that Google is extended, Microsoft is extended, Facebook's on support. Well, Facebook's not that green either. There's a chance for it to pick up here. So again, Amazon, Apple, those ones really seem like they need to pick up. Earlier, we noted that Tesla was right on track roughly with Amazon, and now in the last month, it's really picked up here. So we're really seeing rotation at the Tesla in the last 3 months. In the last 1 month, this pocket is bright green. So we need to see Apple and Amazon specifically do that work. They got to step up and they got to start leading into Q4, which is when they normally do really well. Visa, MasterCard, and PayPal also have opportunity for us to be doing that. And if there's going to be supply chain constraints, Apple, Walmart, Target should benefit from that. They should. Amazon's been hiring 150,000 seasonal employees. Walmart got added to the Goldman Sachs conviction list on Wednesday or Thursday. What does that mean? These companies, if there's supply chain constraints, they're going to be buying everything from these companies. They should be selling out. All right, now moving forward to here. I already have my notes laid out right here, and let's just start diving in. So Apple, Amazon, Google, Microsoft, Facebook. So again, not in the same order here, but I just highlighted a few things here. This is also from the Earnings Whisper report. You can go to Walter Bloomberg on Twitter if you want to see these screenshots, or you can sign up for the service. Apple, again, just looking through here, let's go through one by one. Where's the Apple one? It's actually right here. So for Apple, again, short interest increase, and they're buying calls for the end of the month. I'm actually going to go through the theme, then we'll look at the supporting evidence. So at about 23 minutes here, I'm actually pretty good on time here so far. Apple, short interest is increased. Amazon, short interest is increased. What does that mean? The short interest is increased as these companies are going into their strongest quarter of the year. So it's also interesting that they're buying calls for end of the month. This might be a hedge for the short sellers. And it's really interesting because these ones here have been doing nothing, almost nothing for a year. Google, the bar is relatively high with analysts versus Snap precedents, and they're buying November calls. Microsoft, weak whisper coming in at 3%. And they're also buying a straddle for November, which just means they expect either a big move higher or a big move lower. Kind of already matching what I was thinking here. And then Facebook, the bar is also very high with analysts versus Snap precedents. There's a typo in there. Let me fix that actually. So again, the precedence of Snapchat, basically meaning the Apple privacy issues. We've already saw a huge smackdown, and just a matter of whether or not it's going to continue. So if advertisers are going to be at risk from year to date, again, what we've seen is that the market pushed to new all-time highs, QQQ, SPY, largely led by Microsoft and Google. So now that Tesla's already picking up the steam, we're looking for the same from Apple and Amazon. Tesla was not, it was basically tracking Amazon, I don't know, even like a month ago. So we really want to see these two pick up if this one and this one are potentially going to be giving us some softness. We have to see rotation in tech. And going into Q4, seasonal push, holidays, we should be seeing Apple and Amazon lead anyway. So the evidence supports it. The positioning supports it. I don't know who the hell is shorting Amazon and Apple. Seems pretty stupid to me. But again, they're going after end of the month calls, not for November. They think we better get that insurance going in earnings or we're going to get smoked. There we go. So again, Microsoft straddle. That's pretty much telling us that they're not buying naked calls. They're buying a straddle. Facebook. Again, bar is pretty high, and they're buying end of the month calls. So Facebook, not 100% sure on that one. They could have been buying them before the Snapchat earnings as well. So we're just going to go through here and see what else they got. So again, Apple, right, 123 earnings estimate, 135 whisper, short interest is increased, 150 calls for end of the month. Let's have a look at the Amazon one now too, right? They're buying they're buying 2,700 calls for November 19. Oh, that's Alphabet. Where's Amazon in here? Here we go. 3,500 calls for October 29. Short interest is increased 26.2%. WTF, right? WTF. It's also interesting here that we see a decline estimate for EPS year over year of 29.5%. I think they're actually going to come in line. So again, we're going to see that in the next slides. Really, really important. Looking at the last ones here, now we got Facebook again. Let's have a look at the numbers here for Facebook. I'll just finish it off here. So again, we're expected increase in earnings, increase in revenue. Not really a huge number here to beat though. It's roughly 9%. Whatever. Looking at the next one here, we got Microsoft again. We're expecting like a 2.53% EPS beat. Again, the risk here is that we're already expecting earnings growth and we're expecting revenue growth. What does that mean? If they guide down, the risk is to the downside. Or if they're going to change their guidance, it's likely going to be to the downside. Same thing as Facebook. Why? Analysts are already expecting these things to grow. And after Snapchat's earnings, we did not see any analyst downgrades for the big advertisers, notably right, Facebook, Twitter, and Google. Finally, here we got Google. So again, numbers not terrible for EPS. It's going to be beating by about 10%. Again, earnings growth of 41%. Revenue increase of 37%. Woof, right? That's a really high bar here. All right. Now let's move forward to these last things here. You're going to note that I have the pink line is going to be the pattern that I'm identifying on the EPS curve. And I'm just looking to see whether or not the bar is high, or if they miss, or if they beat, what would the likely reaction be? Now that we know that the A team, meaning Apple and Amazon, are now shorted into earnings with call buying into the end of the month, the risk is to the upside. If the EPS is going to be coming in with a beat or showing us a new pattern, that's what we're really looking for here. Let's go to Facebook first here. They report on Monday. So Facebook has Facebook has a flag forming here. So what that means is just that, again, we're either going to get a beat or we're going to get a miss. And these numbers here are going to drive the next push for Facebook. We can also see that we've been seeing compression from the earnings estimates versus the actuals. What does that mean? Well, right, the risk is that these numbers are going to keep being flat and earnings are going to come in line. We already noted the numbers from Snapchat for that confirmation. Only expecting about an 8% whisper beat here too. Google at 13, Microsoft at 3, and then we got Apple at 10, then we got Amazon at 39. So as we get later into the week, the numbers are expected to be better. Again, these are estimates, they are whispers, they are not facts. So looking forward here now, we looked at Facebook, let's look at Google. Google here, bar is really high. Look at that Nike swoosh. What does that mean? The bar is really high. We're already expecting this number to come in 13% higher, which would be better than Facebook, but this is a really strong move to continue, and the analysts are already baking in very high growth. And Google's already been rewarded for that by being the #1 gainer year to date out of the $1 trillion company. So $1 trillion company group, right? That's really important. Looking next to Apple, the bar is really low, right? Really low. So again, I drew a cup and handle because that's what I think is going to happen. The bar is really low. We're seeing compression on the beats. What does that mean? The green lines are just coming in closer relative to the gray lines. What does that mean? The bar is really low. They've been shorting it. If they come in with a beat, it would be a huge surprise. And we're going to see forward guidance if the MacBook Pro and AirPod 3, along with their WWDC event, has actually made people want to order these products more. Whisper numbers coming in a little bit better at 10% as well. Finally, we're looking at Amazon. This one is the one that is the huge potential. We have a head and shoulders here on EPS. Again, those are the dotted gray lines. What does that mean? People expect Amazon to suck. They expect them to go back to pre-lockdown EPS. I don't know that's going to happen. So looking here, we have head and shoulders on the estimates. Actuals are crushes. I'm talking big crushes. One was 100%. So we had like 65, 95, 38, and 18% beat. And now the gray dot is actually a lot lower, back in line with where we were back in Q3 of 2020. That's why we're expecting sequential decline year over year of earnings, as we noted in that screenshot above. What does this mean? They've crushed earnings. Earnings growth through the lockdown is holding. That's what we're estimating here. Again, we're estimating 12.10 in earnings. So that would mean that the green dot would be about right there. So again, that means that we're seeing roughly $12 to $15 in EPS over the last 4 quarters. That means that the trends that were established during lockdown are persisting, right? It's not transitory for Amazon. 39% EPS whisper beat. That is a big number. All right, now let's jump back here to SPX and let's go through the rest of this now. So we're just going to go through the supporting evidence a little bit faster now. Already gone through ETF. We already gone through the calendar of events. Option clues. I'm doing this one last just because this is probably a little bit over the head of most people, and this is really just the cherry on top. It should not be the basis of your analysis for the week. What I'm noting here for Monday, Wednesday, Friday is that we're going really close at the money, and Friday sees the follow through here. So here we're pretty much at the money. 453 is the pivot, push off, push pull, lots of volume. We'll see what converts into Monday. Wednesday, very similar strikes, very similar volume in terms of comparisons for the call and put side. And then when we look out to Friday, this is where the numbers get a lot bigger. So Friday, same strikes at the money, heavy volume though. So I want to see what's going to convert into open interest. And again, 453 down to 450, and then we got 453 up to 455. We talked about those areas when we looked at the technical analysis before. Now we're going to look at November monthly. This is where it's interesting because people are placing bets for beyond October end of month and post FOMC. What do we note here? I'm noticing a few things. 450 straddle. We take the premium on that, right? 450 straddle, 440, 445. They're all there. So I note the straddle here, 30K, right? We got about $5 and $8, right? That's about 12. I'm going to focus on the 440 and 445 because they're in the money. We got 450, 455, and 456. Sorry. We got a 450, 455, 460 call spread. What does that mean? That's bullish. Look at that fat call right here, right? 113 at 460. Woof, right? There's no reason why we can't get there. 440 straddle has $19 in premium, which implies break even of 459 or 421. I think we're going to 459. 445 straddle has 15.5 in premium, which means 460.5 or 429. Again, right around that 460 area. It kind of seems like we're going to go there like a magnet. I'm looking here at these numbers here. So again, the 440 straddle, we just take 16 plus 3 equals our premium, 19. Here we got 1175 plus 378 equals roughly 15.5 in premium. Looking out post November to December, there was not really a trend when we did the weekend deep dive last weekend. So now we can look here and see that we got pretty much the same thing here. 450 straddle moving up from 445 and 440. And now we see the same thing. We got a 450, 455, and 460 call spread. Even some here at 458. The biggest open interest visible on the 16s is 460. Oh, and what's the premium attached here? It's $6. That's 466 break even by December 17th. Wouldn't that imply an end of year rally to 470? Goldman Sachs, right? I think so. All right, now looking at QQQ. And again, this is where the analysis regarding the trillion-dollar company's earnings estimates versus what could happen is why there might be a little bit of discrepancy here. This is very similar to SPY, where we have at the money for Monday and at the money for Wednesday, but it's very muted going into Wednesday. What does that mean? No one really wants to bet on the first batch, meaning Facebook, Google, Microsoft, because they're going to report after Tuesday, which means they'll be hitting the tape onto Wednesday. No one really wants to bet one way or the other, but we're noticing an open interest 368, 374 call spread here. A little bit more muted here on the put side, but there is some volume. It's just muted. Looking out to the end of the month, again, this is where it really matters. Big volume here. If they're closing this out, we're going to see that number get reduced, but that's big volume. That's about 90K here. And then on the call side, roughly same premium, 161, 189, halved in premium here, 55,000 in volume. So 376 versus 370 is the numbers to watch going into Friday. Now, as we look out past this expiry, we look out to November 19th. Again, I think that if we get a shakeout or rotation between the trillion-dollar company, we saw it happen on Friday, right? Look at this crap that happened on Monday. Oh my goodness. So we look here on Monday, right? Woof, 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 woof. All right, man, these companies stink. Google, Facebook, Amazon, but S&P basically closed with a doji. It closed and opened at the same price. What does that mean? The entire rest of the market picked up the slack, and they pushed up Netflix and Tesla to support it. So these big blocks are red. If Apple, Amazon, and Tesla can resume higher with Netflix, it can offset the red here, which means we go flat, kind of like the seasonality chart says. What does that mean? It means that I think that these numbers are going to get deeper green, and these ones are going to start getting more muted, right? Maybe come down a little bit for Google and Microsoft, and Apple and Amazon pick up the slack. So again, now we can see here that out to the November expiry, I'm looking at 36 minutes here, getting a little bit longer, but this week is a big week. So hopefully you enjoy the content. If you do, again, please smash a thumbs up and drop me a comment. The comments really go a long way to support our channel and grow to a bigger audience. Here we're noting a few things. We got, what do we got here? 370, 375, 380 call spread. What does that mean? They moved the strike up by $5. Instead of 365, 370, 375, now they're going 370, 375, 380. Big numbers here. And then we got 369 naked puts. So we got 82K here in OI, which has not changed, even as the market moved dramatically higher over this last week. Finally, looking up to December, pretty much the same theme here. Now they're moving out to 375, 380, 385. So for November, we got 370 to 380. For December, we got 375 to 385, which implies follow through. Yeah. Muted though. Why? Again, Apple and Amazon are likely going to pick up. I think the other ones are going to be a little bit soft. Finally, looking here to options flow for this week, we're going to note that I'm purely looking at what was bought this week and expires next week. What I note here is just that look at the puts, right? Jesus. Tons of puts. These are all minimum $250,000 orders. And these ones here are going to be for the first part of the week. Yeah, mostly red for the first part of the week. And then Friday is where we see all this activity here, right? All these calls, all these puts. Mostly red for QQQ. And I think there's likely naked call buying for Apple and Amazon. As we noted, they got to the 150 and 3500s for Amazon and Apple respectively. I think that's pretty much it. So like I said, there is some bonus content in here for members only, and I'll touch on that briefly when I do my newsletter update that I'll publish a little bit later today. Also, a SPY buy pocket here. You want to see what those levels are? There will be a link in the description where you can join us for a 7-day free trial, and you can see everything we are expecting for this week ahead. So again, are the bulls going to cinch the win? I think they pretty much already did. Already printed a record high. And that's what I mean here by these blocks are red. Did not really hurt the market. Everything else kind of picked up the slack for Intel, Google, Facebook, Amazon, Match, and Twitter. A couple of blocks are red, but for the most part, S&P closed out with a doji, and that's damn impressive. New record high, higher low. Watching really close. I wish all the best of luck this week. And again, I would really appreciate a thumbs up and subscribe to the channel if you want to see these weekend videos. We publish one every single weekend. Thank you very much.